What if the most powerful empire in history doesn't rule land, but rules ledger books? What if it conquers quietly, not through armies or invasions, but through contracts, interest rates, and obligations written in language the public was never meant to understand? And what if this empire rose not by force, but by a blueprint drafted centuries ago, refined in secret, and now woven into the foundation of every modern economy? Today we're exposing the hidden architecture of global debt, how it was designed, how it expanded, and how it turned into a silent empire, shaping nations more effectively than any king or conqueror ever could. The story begins long before central banks or digital markets. In the 1600s and 1700s, early governments discovered a powerful trick. They could spend money they didn't have, simply by borrowing against their future. The world's first major experiment came in 1694 with the creation of the Bank of England, an institution built not to store gold, but to finance government war debt. Investors lent money to the crown. The crown guaranteed repayment through taxes. And suddenly, a new power structure emerged. Governments became dependent on lenders. Merchant financiers in Venice, Amsterdam, and London expanded this model. It wasn't robbery, it wasn't invasion. It was something far more efficient. Control through credit, piece by piece, the blueprint formed. Nations didn't need to be conquered. They could simply be financed. Debt had natural limits as long as money was backed by gold. But the 20th century erased those limits. 1913, the U.S. Federal Reserve was created, centralizing control of money creation. 1944, the Bretton Woods system tied the global economy to the U.S. dollar. 1971, the gold standard was severed. Money became pure abstraction. No anchor, no restraint. Governments could borrow endlessly. Banks could create credit from thin air. Debt became the engine of growth and the foundation of survival. This was the moment the silent empire stopped expanding quietly and started expanding exponentially. Once money could be created without limit, something else became limitless: crises. And every crisis made the system stronger. When governments overspent, central banks bailed them out. When banks failed, new credit was created to rescue them. When economies slowed, borrowing increased to stimulate growth. Each failure tightened the system, not weakened it. Because every solution required more debt than the problem that caused it. Debt became the medicine, the poison, and the entire ecosystem. Today, the numbers are staggering. Global debt exceeds $300 trillion. Many nations owe more than their GDP. Entire currencies swing on interest rate changes. Households take on more debt just to maintain their lifestyle. Governments can't stop borrowing without imploding their economies. Banks can't stop lending without freezing credit. Central banks can't tighten too much or ease too much without triggering chaos. The silent empire no longer needs to hide. Its power is in the fact that the world depends on it to function. Politicians promise solutions. Economists propose reforms. But every fix runs into the same structural reality: cut spending, recession, raise taxes, slow growth, print money, inflation, borrow more, larger future collapse. The blueprint has no off switch because the system was built on a single assumption: growth must always continue, even if it's fueled by debt. And now, the machine can't stop, because stopping would destroy the very economies it sustains. We're living inside a system built on promises that can never be fully kept, yet must always be renewed. A structure held together not by gold or productivity, but by confidence that grows shakier every year. If you want more deep, clear breakdowns of the financial forces shaping the world behind the scenes, tap like and turn on notifications, because in the next episodes we dig even deeper into the mechanisms that were never meant to be understood by the public.